Thanks for tuning in to the Big Money Investor Show with Jim Ingersoll, where we talk about the best strategies for you to create cash flow and long-term wealth. Investing like the very top investors. Visit us online at www.bigmoneyinvestor.com and enjoy today's show.
All right, everybody, this is Jim Ingersoll with the Investor Success Podcast, and I've got some incredible content for you today on the different benefits of owning investment properties. There's lots of ways to slice and dice deals, and our very special guest today has done all of them, and he knows all the different types of benefits and how to make the deals work sideways and vertically and every which way. Let me tell you a little bit about Jack Shea. I've known him for a number of years, but Jack Shea moved to Florida in 1978 and began investing in real estate. He is both a licensed realtor and a mortgage broker. He's done lots of syndication work, mobile home developments. He's also bought and sold mortgages and notes on real and personal property. And he concentrated a lot on buying and selling options. He's an expert on options, and not very many people are. He also operates a 1031 exchange with his wife, Merle, and his son, Daniel. He's taught classes to investors nationwide on lease purchase contracts, buying notes, expert on land trusts, exchanges, and IRA investing. I'm personally benefited from Jack's training over the years and implemented many of his strategies personally. Jack developed several unique strategies in options, trusts, exchanges, and IRA investing. He, along with Jack Miller and a few other investors, pioneered the technique of gaining personal control of IRA funds, which is phenomenal. I use Jack's method for this personally. This required the working directly with a number of IRA custodians to develop the trust documents necessary to accomplish it, and it works out really, really well. I am so excited to have Jack Shea with us. Jack, welcome to the Investor Success Podcast. It's nice to have you along today.
Jim, I'm happy to be here again, and I'm looking forward to it.
All right. Well, before we jump into the discussions on the benefits of investment properties, I want to talk about looking back over the many years you've been investing and looking back to those early years. What was it that you sort of did right in your early years to find success in your personal life?
Well, Jim, after I moved to Florida, I got a real estate license, and my father had investment properties when I grew up in Chicago, but I didn't know much about what was going on. I mean, he had those in trusts and all that, which I learned about later. But I started going to an investment club that was after I took a Lowry Nickerson course, and they had a course. I said, okay, I'll go to this. And then I started going to the meetings, and people like Jack Miller and John Schaub would be talking, and Jimmy Napier. So I tuned in. I kind of got aligned. Jack Miller lived 15 minutes from me across the bridge, got aligned, and I'm looking at walls of books of seminars that I took. And they have,
you invested into yourself early, didn't you?
Well, I'd say that's something people have to do is get some education. This is a tough business, and there's too many tricks and traps to just go wing it on your own, because you'll get a seminar. Well, it's easier to pay for the seminar, and then you'll get it either way, like from tenants. So I learned, started buying houses and studied lease options. So I would say pick out a couple of educators that have a good track record, and I don't tell people what to do, but I've seen people waste $25,000 or $30,000 on boot camps and mentors. Right. I think people can kind of bootstrap, move slow or move ahead, and learn a little more. And then I studied notes, so I did a step by step over the years. And it's been very profitable to me, and as I think Dimitri said to me the other, I'm at the end and spend phase right now, Jim.
You're at the fun part.
Yeah. So.
And I know you like to have fun, because I've been on IRA fun cruises with you, and you're out there dancing and having a good time all the time.
Well, the people Photoshop me into a lot of those things, Jim. So. Wouldn't be me, but
Oh, no, of course not.
No, I do.
Of course not.
It's a good group, those guys. People can learn and share and enjoy at the same time.
Yeah, it is. It's a good way to go. And some of those folks you mentioned really had a big impact on my life as well. Certainly, Jack, you did. But also you mentioned Jack Miller, while he was around. Fortunately, I got to go to him the last few years of his life, learned a lot. Boy, he talked so fast, and I took so many notes. It was crazy. John Shaw, just phenomenal. Peter Fortunato, all you folks down there in the Tampa area really had a big impact on investors all over the country. So today we're going to talk a little bit about the benefits of investing in investment properties and the way you can kind of slice and dice and the different benefits different people can enjoy based on where you're at in life and what your situation is. There's different ways to do this. And I really love the way that you put this story together. So, Jack, I'm going to let you introduce it a little bit here and tell a little bit about what your thoughts were here.
Well, I pick stuff from other, like convertible debentures. I pick stuff from other places in the tax code and apply it, like depreciating option property and stuff that's not quite straightforward, but you have learned how to do it. And this is one thing that some people say, well, you can't do this. Well, partnerships do this all the time, Jim. In a partnership, they have people get various benefits for various amounts of effort. So we've adapted this to, say, buying a note on a piece of property or buying a property where a kind of a passive guy like a Dr. Jones has got the $100,000 on a $150,000 deal. He doesn't need the monthly income and he doesn't need the depreciation. So he's in one category. Then there's a Jim who's an IRA guy and maybe a finding a deal kind of guy, and he could use some cash flow and wants some gain. And then there's Jack, the worker, as we're talking about, that like Bob in that example. He needs some cash flow. He wouldn't mind some upside, and he can use the depreciation to offset his cash flow. So people are. And so you write in this, typically we do all our deals in a trust, in a land trust. So this makes it easier as far as doing tenants or doing deeded interest is that we have shares. The doctor has a 50% share and the IRA guy has a 35 and the worker has 15, whatever. And it's in called a agreement of the beneficiaries and who does what. So they put this down, and then as the property is rented, that Bob gets a $100,000 property at 3.63%. That's $3,600 a year of depreciation. It's pretty substantial. So that's like $300 a month, which is typically the cash flow on that type of property. So it would shelter about all, meaning tax defer all of the
cash flow.
The cash flow. He'd like a bit on the back end, and then the Jim, the kind of the rainmaker or whatever, puts this together. He puts some money from his IRA, would like some cash flow, but since he's 40ish or 50, he's not ready to cash in. He can wait, and maybe they have a 5 to 10 year program, and the doctor gets his money back first, and say maybe a guaranteed 6 or 7%, and then half of the upside, or any kind of formula that is amongst people is agreeable, and splitting these things up where everybody's happy for their efforts expended, and everybody's rewarded proportionately. So that can be done.
Everybody is rewarded. I mean, I love the way that you're slicing and dicing this three ways. Because, one person needs depreciation, someone else needs cash flow, someone else wants parts of the capital gains later. And what's cool is you're doing it all in a land trust. Every partner gets what they need, every person in the transaction. But you can't do this with a bank, can you? You can't go to the bank and say, I want to do it this way. So you got to get rid of the banks and get out of that mindset first, right?
Yeah. Well, I've never used a bank, Jim. For my first deal, I've done hundreds of deals. I've never had a job. I've had jobs in the Air Force and in business, but not as a realtor. Yeah. And so after I used seller financing and some cash that I had, and eventually these houses started spinning off quite a bit of cash, and then I became a bank. So I'm a lender. I'm a hard money lender for many years. And so as far as going to a bank, they store my money or checking accounts, but I've never borrowed any money from them. And I think that's a lot of investors. If some of them can get bank rate loans, that's pretty powerful, 4%. But there's a downside, as we saw in the crash, where people had a little more debt than the market would bear, and they lost. They had bankruptcies and foreclosures.
Right.
So.
And you're doing it in a land trust, which is great. So you can divide
Jim, if we had a note, it would be in a personal property trust, same vehicles, but it's not, and we could dice up the note income and growth, especially if you buy it at a discount and there's unearned income coming out. So you can do it just as well, but it's private, it's legal, it's safe, and used in all 50 states. And it's simple. I do these classes and make people fill out a deed and fill out a trust agreement. It's like a couple what goes on a contract, a couple people's names, an address, a couple dates, amount of money, look at what goes. So it's not a mystery. We try to demystify this trust business to every person that walks out the room or takes the course, which I have on video. They can do it themselves. There are a lot of parts of the country where there aren't any attorneys that are qualified, or if they say, no, this is illegal or bad, or you must use LLC. So it's the people that know that it can be used anywhere and get qualified. They're operating safely with attorney-written documents. That's not something that I invented, like Mark Ward, an attorney. So all these deeds and struts are made by professionals, and if you can fill in the blanks, you can do it.
Sure. And for everybody who's listening, you can check out Jack's website. He's got both live events and products there that you should take a look at for trust options, self-directed IRA investing, and things like that. And his website is www.jackshearealestate.com. Jack's last name is spelled S-H-E-A, so it's jackshearealestate.com. I highly recommend it. There's phenomenal content, some great videos there, and all kinds of stuff you can learn about. Let's go back to real quick and talk about the power of depreciation, because we happen to be at tax time right now, and that's when depreciation becomes real for a lot of people, doesn't it? When you start getting it does for me.
Yeah, it's a for a lot of people. It's a benefit that only real estate has. It's cost recovery. The IRS allows you to get, for that $100,000 house, they allow you to have $100,000 of non-taxed income till you get all your investment back. Now that's spread over 20 years. That's a big concept.
Imagine $100,000 of non-taxed income. I mean, that's a huge benefit to investing in hard assets in real estate.
And it's and by the way, if you don't take it, it's available. That's imputed anyway. So if nobody in that crowd of 3 or 4, nobody uses it. Too bad, because 10 years After it was purchased, it's deducted by the IRS as if somebody used it. So then you can use it or not use it, but you're charged for it. So it might as well, somebody might as well use it.
So on a $100,000 house, that's $3,600 a year, and if you owned a number of those, that's a lot of money. But one of the things that makes some people weary or nervous about depreciation is the recapture. When they sell the asset, they have a capital gain, and then they do the recapture on the depreciation. But as you know, I mean, you facilitate 1031 exchanges. So you want to tell how that works and
well, a lot of investors like Jack go through their life exchanging, and I've exchanged. I've paid the tax on a few occasions when I had, and I took the cash and paid off 4 or 5 mortgages. So you get to decide one, and you pay the tax recapture at 25% before it gets to a capital gains rate. So your capital gains rate might be higher or lower, but the 1031 exchange allows investors to continually roll over a sale, take the profits, and we do exchanges every day. It's very busy. We got like 5 closed last Friday. The coast to coast.
Holy cow!
People are exchanging big and small sums because the market is up. That people are getting financing, so they're getting bank financing. And the money comes through here. We've done them as low as 30-some thousand and up into the multi-millions. And they have 180 days to spend their money, 45 days to pick out some property. But most investors are tuned in. They already know some stuff or have an eye on stuff. Or what I did was have options. I optioned 50 houses in 1 year, so I had options on the shelf. And we would have lease option tenants, and somebody'd call up that they can get financing. They're going to close on the house, so I had plenty of things lined up on the shelf to close my own options. I'd encourage people to have a few options on the shelf, and when somebody takes a house away from you or you market one, you're ready for the exchange, I would look around the neighborhood and see if there's something better. If not, I would just close on stuff on the shelf. But at the end of the day, Jim, people go through a career of gaining of a portfolio of houses. When they die, their heirs get the property at a stepped-up basis, and the tax never gets paid. So it goes from one generation to the other, and they get it the next kids or whoever gets it at market value, and they start over again. So it's not a bad system.
So if somebody out there has got some rental property, and there's a lot of people buying turnkey rentals and other things right now because everyone's wanting to get into real estate again, and they want to avoid the recapture and they want to avoid the capital gains, they could do a 1031 exchange and then just buy a new property and avoid all that tax, right?
Well, so how much they would buy something that's a little rougher and needs a little work. Yeah. But they sell retail and buy wholesale. That's what, and a lot of people I say
that's a winning formula.
Yeah, if you've got $100,000 coming from an exchange, I would take the 100 and I would go out and buy $200,000 houses, and I'd say, Mr. Ingersoll, I've got $50,000 cash here for half of this house, and I would like you to carry the other half. And you can go all over, and I would do that, half down and half debt. And so they double their portfolio, but as the growth goes and the buy down, so they divide and they multiply, and they use the cash to, instead of buying for all cash, there's a large number of owners that will take part, and I say on the installment sale.
I'm working on a package right now, Jack. It's 8 houses. It's 8 houses that 2 kids inherited from their father, and they've all got some. They're all rented. They all have. Most of them are long-term tenants. Some of them are over 10 years, same tenants in the house, but the rents are below market, and the houses all have some deferred maintenance. but they need out. I mean, when the son's an electrician and the daughter, I forget what she does. So I made them a seller finance offer last week that I hope to close at the end of this week with a small down payment on the whole package of 8, and then 5% interest. And so those deals are out there. You just got to get out there and find them, find people that need help, and make offers that work for everybody.
Yeah, and you show the confidence that you know what you're doing, that you will manage those properties properly. They will be secured and get paid. And I've put people, when they've done, put them on auto pay. They never have not hear from me again, but I never be late. I never miss a payment.
Right.
And then they start telling their friends, and pretty soon you might get calls from other people. Can you do this?
Yeah, and this package of houses, by the way, is not on the MLS. There's no realtor involved. It was a referral. It was just a referral. So those deals are out there if folks want to take advantage of them and can learn to structure offers that work for everybody. So that is great on depreciation in the 1031 exchange. How would you describe to somebody who's never heard of a land trust what it is and why you want to hold title that way, why you want to deed property that way instead of your personal name?
Well, Jim, it's a concept that came over with English common law. It predates corporations and LLCs. It's just an entity to hold title for the benefit of somebody else. So the trustee doesn't manage it. He doesn't have a bank account. He merely holds title. And by doing that and only taking direction from the beneficiary, he avoids any liability. It keeps the owner off the public record. Yeah,
that's the tenants,
the tenants, the bureaucrats, they can't find out who's who, and it doesn't stop, Jim, that the house burns down because you wired it backwards. It doesn't stop real liability. It stops harassment and petty jealousy, or somebody looking up Ingersoll and seeing 40 or 60 houses. And a guy came to me to do an exchange some years ago, and I've been on ski trips. He's at 700 units in his own name. I mean, apartments, 30 units here and 60.
Can't imagine.
And he said, I said something, no, it's too complicated, Jack. So I'm surprised he hadn't been sued just by normal numbers, but it's a simple concept that's easy to operate. It's the law of the land, and it's a revocable trust. And we have some strategies, Jim, in these classes that there's 10 layers of asset protection that people can't get through it, and they cannot penetrate it because we have some prizes for them. And it just gives, my wife would not be handling all these houses and mortgages if people could pick up the phone and yell and scream. It's like dealing with Visa or the phone company. You don't have anybody to get mad at, you know. And we treat people right, but it's I wouldn't do business without it.
Yeah, it's a great way to, like, if you're a landlord and you have property in your personal name or even in an LLC, it's like walking around your city with a target on your back, because it's very, very easy to figure out all the houses you own. Super easy.
Well,
15
those
seconds
contingency fee law firms, if somebody has either a real accident or a not so real accident, they look up and they say, okay, Joe Smith here. Oh, okay, we see how we're going to get paid here. And Mark, my partner, Mark Warda, has been my trustee for 30 years. He's a trustee for over 1,600 trusts. And he knows what works and what doesn't work, and they serve him. And they say, well, who's the beneficiary? He said, oh, you have to get a court order to get that. And so if they do that, then we have another surprise waiting for them. So they just tend to leave us alone. The big law contingency fee firms in Florida won't take on a trust for free unless you put money on the table. And the tenant that doesn't have the rent or whatever, or people find they're not that mad. And so it's just simple. I'm the agent for the trustee. The tenants, you post a 3-day notice. They don't you're just the agent, the realtor doing your job. And anyway, it takes the stress out. Same with collections, late letters, and stuff like that. It's just peaceful, and it's legal. But we have a lot of other behind like this sharing partners. We can take partners on a note or in this property of you and I and Gordon.
With the agreement, beneficiary agreement?
And in and out. If you say you've got a good deal on 8 houses, you'd like to trade in your share or half, I'd say, instead of saying you want to borrow money, say, Jack, I said, okay, Jim, I'll give you 50 for your 60% or your share, and you can come back in anytime. So you take the cash and go do that deal, and then after it gets cash flow, you come back in and say, can I get back in? Sure, So it's a fungible commodity. You can sell it, you can trade it, you could sell it to somebody else, and it's private, off the public record. We can do it. And we do it, and it improves your flexibility with your investment. And
it gets you off the grid.
And that checkbook trust, when you have money in your briefcase, or that you can get on a Saturday afternoon, the velocity of your money is accelerated, and you get it back on the street, and then your rent payments and go into the corner bank. Right. And your whole machine is well oiled and flexible.
Yeah, I love using that. That's exactly what I do. You mentioned about a little bit about financial friends. How important have they been over the years, both as a financial investor and as a real estate investor? I guess both sides. Having a network of people that you could rely on to exchange ideas and exchange deals and things like that.
Well, the network, Jim, like at these meetings, is very valuable, and we trade. It's not a zero-sum game. That we still have a Jack Miller alumni meeting twice a week in Tampa. Anybody's welcome. It's like a round table. We go around. We don't have a speaker, or sometimes Pete or John, or I'll talk a little bit, but it's basically sharing and kind of crowdsourcing the certain problems, and it's fun. Yep. We network. As far as I got some strong multi-house seller finance deals, which kind of became my bank. And one of them, like 35 houses, I would say, I'll buy all your house. Well, I didn't mean buy, I meant option. They had money later. They say, do you need some more money for other things? And they would stack the note on one of the previous properties. And someone said, well, we don't need any, but sometimes Daniel or we would. But it's great to have people that when they're paid, they're happy campers, and they're looking, they're willing to place more. But it was really the network of ideas and sometimes deals. If I'm not ready for, I'll say call Nick, call Dennis, call Nick Burby, or and move on. And I don't say, well, you owe me a referral fee. We scratch each other back.
It goes back and forth. Yeah. Well, that is awesome. I think that is super powerful. And what you started with as far as getting around the right educators, and then what you ended with just there as far as building your network, and then referring other people to each other, using your network to help other people and them helping you is the way that you're going to grow your successful investing business, I believe. It's not a lone ranger. You don't have to do it alone. You're better off getting around the right people and everybody, helping lift everybody else up.
Yeah. I have rolled a lot of my houses into seller financing, and I get above market prices, above market interest rate, and no more turnover, paint, repaint, release, and they're happy campers. They pay on time because they're mostly unbankable people who are paying neighborhood rents, and so that's my income stream, along with a few houses. But whatever it is, the whole game has been wonderful. You get to pick and choose what you want to do and when and where, it's I wouldn't trade it for $1 million or millions
awesome.
of bucks. Yeah.
Yeah, I agree. Well, Jack, thanks so much for being my guest. And again, everybody needs to go to Jack's website and check it out. Phenomenal amount of information here, training videos, and everything about from self-directed IRAs to land trust to personal property trust to the 1031 exchange. His live events and his video training is phenomenal. I've personally used it. I've benefited from Jack's teaching over the years and really appreciate your being willing to share today, Jack. But it's www.jackshearealestate.com. JackSheaRealEstate.com. Check it out and get yourself going. Jack, thanks so much for being with us today.
And how about you think up another topic for another day, Jim?
Yes, we will do that because you're like somebody I
Okay.
love talking to because you get my wheels turning and you bring back memories and you get me thinking about creative financing and depreciation and 1031 exchanges. I mean, we covered a lot of ground today. So I will definitely do that in the very near future. All right, everybody. Well, that's it for this very special episode on the Investor Success Podcast. Again, my name is Jim Ingersoll, and I am your host for this podcast episode. I'm also the founder of the Investor Success Mastermind, where I help investors achieve success investing in real estate. You can learn more about it at www.investorsuccessmastermind. Feel free to reach out to me if you got a question on today's episode at jim@investingnownetwork.com is my email. And if you want a free gift, I've got a free investor kit for you today at bigmoneyinvestor.com. Again, I'm Jim Ingersoll. Jack Shea, thank you so much for being so willing to give today. We all greatly appreciate everything that you do and want nothing but the absolute best for you as you spend towards your end.
My pleasure.
Thanks for joining us today. Be sure to share this podcast with your friends and social media contacts and visit us online at www.bigmoneyinvestor.com.